Hey, hi everyone. Good evening. Thank you for being here with us. Let me start by introducing our two panelists. I have Arjun here, who leads venture investing at Verlinvest. Verlinvest is a large fund focused primarily on consumer brands investing. He was also the CEO of Dr. Vaidya's before. I'm sure many of you in this group already know what that is. It's the largest online Ayurveda brand in India with a 150-year-old legacy. I think the online reach is 1 million plus customers over 500 cities in the country. While I'll not go into a full list of Arjun's accolades, I'll just call out that he's been on the Forbes 30 under 30 list for Asia and Business Week's 40 under 40 list. We're excited to have you here, Arjun, and looking forward to hearing your perspective on being an entrepreneur and then becoming a VC.
Thank you. Thank you for having me, guys.
The other person we have on the panel with us is Pankaj. Pankaj leads investment banking for digital and technology at Avendus, one of the most fierce and respected investment banks in India today. He has over 21 years of experience, having been at Avendus, at JP Morgan as well, and brings immense insights into digital, technology, media, communications, IT. The list just goes on. We're excited to have you, Pankaj, and we're really keen to learn about your experience, the dual vantage point that you have as an advisor and a banker, seeing how startups are growing, as well as how investors are thinking about funding these companies. Thanks to both of you, and glad to have you here.
Thanks for having me here.
Let me kick this off with the first question for both of you. So 2021, 22 compared to 21 has been a reasonably volatile year. There's been a lot of coverage of how funding has started to slow down. That said, it's not just limited to private capitals, but the same has been across public markets as well. We've seen that India has still been resilient to this. A lot of money has come in, primarily private equity and venture capital. Now that we are at the brink of 23, where do you see this capital flowing in the coming months?
Yeah, so I wanted to say hello to everyone here and thank you for being here and taking out the time to listen to what we have to say. I want to say that this conversation is specifically special because the last time I was on this stage was my wedding Sangeet. And so I'm here for a very different occasion.
Oh, awesome. I hope, Arjun, you'll break out into a dance
Yeah,
soon.
yeah, that's what my wife was saying as I sent her a photo of this place. But look, I think it's been a different year from 2021 for sure in 22, right? So 21 for me started actually with the sale of my company. We exited our business in April 21, and then I took on a new hat or avatar as an investor. And I want to say that 21 was actually, it was a little bit crazy. There was things happening really fast. There was up rounds there was capital being raised, and a lot of us didn't actually stop and think what was going on. I drank the Kool-Aid as well, and I started believing that a lot of it was real and going to stay. In 2022, we've had somewhat of a correction, but I will say that, and I am very biased because I'm always bullish on India. I wear this band with the Indian flag on my hand, have been wearing it for the last 13 years. We're much better off than the rest of the world, right? We are a domestic economy with so many people and so much opportunity for consumption that we're insulated to what's happening in Europe and the US. And so even though there was all of this news and there is all of this news of the winter going on, I'll talk from an investor's perspective now. I run a VC fund with Verlinvest called V3 Ventures. And I will say that we have not stopped investing, reduced the pace of investing, or reduced our excitement towards the space. I started my company in 2016. The world was a very different place. When we talk to founders now and they say, hey, funding is so difficult or has become a little bit more difficult than last year, the world was very different in 2017 and 2018. Funding rounds took 6 months to a year to close. So I think the startup ecosystem in India, the early stage ecosystem, consumer brands, D2C brands like you who are selling through platforms like Flipkart, you're so much better off than we were 5 years ago. And the one thing I will say as advice to all of you who are running brands, thinking of raising capital is that sustainability and bottom line profile is a conversation that's come back now. It's not like it wasn't there, and Pankaj can talk about it as well. It's not like it wasn't there at all. It was there. It just lost us for a little bit. And so when you're thinking about your business, think about growth, think about scale, but also think about how long this scale is sustainable and how long this growth is sustainable. Because that's what investors like us are looking at. We're okay if early stage businesses go through some capital, burn some capital to get somewhere in terms of growth. But in the long term, a consumer business, a consumer brand has to look like a normalized P&L. It has to look like a steady state P&L, right? So that's something just to keep in mind. But yes, I think all of us in the investor ecosystem are still very bullish on India, still investing actively. And so if you build a good business, I'm sure you'll be able to attract capital.
Great, thanks. I think, as you rightly said, right, 2021 was obviously really almost $35 billion of capital was raised in India. And in 2022 also, I think almost first 6 months, the party was going on. So if you actually divide H1 versus H2 in 2022, you can actually figure out in second half of 2022, it slowed down significantly. But it's all again relative to what we're seeing in 2021. If you actually compare 2022 with 2020, it's still not bad. Actually, capital has gone up. Average size of an investment has gone up. And both primary and secondary transactions are happening. And since we're in the middle of the market, I can tell you that there was a time there was almost a freeze, but we've started doing transactions. The money has started coming in, and term sheets are getting signed. Like as we speak today, it's a good day for us. Like we are selling $100 million, at least 3 term sheets come on one particular deal, and so I'm feeling pretty positive. The reason is there are 2 reasons. One is obviously some of the momentum investors and quote-unquote crossover investors probably might have disappeared because they're not seeing the IPO pop. But the people who wanted to kind of be here for a long term, the private equity, the pension funds, the sovereign funds, the venture capitalist community, they're all, want to do the deals actually. And they think that, now they have a chance of doing some good deals, doing good diligence, as compared to in, 2021, they were basically both outbid and outpaced by some of the, the people that we know who, can do deals in a month's time. So capital is still available. It is just has changed hand from the people who are doing it on momentum versus people who want to do it, thoroughly. So, and obviously for us, it's good because we don't get disintermediated very easily now. So people want to work with us, and we are seeing tremendous amount of business as well.
That's definitely great to hear. Let me talk a little bit about e-commerce, because we can't not talk about e-commerce at a Flipkart event. Sham showed us a lot of fancy charts, large bars going up. As investors, where do you see the interest in e-commerce is? What is at the cutting edge? What is the new tech that investors would want to look for?
Yeah, look, I think that, again, you're asking a question to someone who's fundamentally biased. I buy every single thing that I consume online. I've stopped shopping offline. And so I started drinking the Kool-Aid and believing that there is going to be no offline consumption. That's not reality. Having said that, I'm really biased because I built my business online. But I will say one thing, right? My parents are parents of an e-commerce entrepreneur. I started my e-commerce journey in 2017. Until March 20, they had not placed an order on Amazon ever, not placed an order via D2C. My mom didn't have online banking set up, and she had never used UPI. That changed significantly, right? And so in the pandemic, you got this whole section of customers that had never shopped online to come and shop online. And that section of customers, some of them may have gone back, but a lot of them are still shopping online, right? The speaker before us talked about 5% e-commerce penetration. It was 4% last year. And so fundamentally, there has been a lot of growth in e-commerce. There has been change in behavior, lots more customers adapting e-commerce. The other exciting thing for me about the e-commerce space is it allows niche brands to thrive. If you're a niche brand in a smaller TAM or smaller market category, going offline into thousands of stores may not be the right way, but online actually allows you to reach those 20,000 customers in 50 cities or 100 cities. I think as investors, what I look at as an investor now, as I'm looking at e-commerce businesses, because I do this on a daily basis through my work, Obviously, at an early stage, you spend a lot of time understanding who the founder is, why they have a right to win in this space. We're spending time on market size and thinking about how big this can get. So that's something to keep in mind. And the third thing, and sort of the most important thing, is the business and the economics of the business. So we look at revenue, growth velocity, but we're looking at two metrics that are really important now. The customer acquisition cost, it has to be sustainable from a unit economics perspective. And so you have to make or break even on the first order and then make money on your repeat orders. And the lifetime value, the repeat rate for the businesses, that's one secret sauce that e-commerce or D2C business have, data. And so using that data effectively to bring the customer back multiple times, I think that's critical, and that's what we're spending time on when we're looking at companies and investments.
No, some of the things that actually mentioned in the last presentation and what Arjun mentioned, I'll just build on that and add two segments. One is D2C and the second is platforms. On D2C, there are 20 plus companies already who actually have crossed $100 million in net revenue in India, and which was not true for like 2 years ago. So people have seen tremendous amount of traction. What is interesting to note that is, it's easy to get to a couple of hundred crores when you launch a D2C, because you'll see that immediate traction. But you need to kind of leverage that brand that you create over other platforms like Flipkart or omni-channel. So what we're seeing is, and what Arjun mentions exactly right, where is this margin utility of incremental CAC actually starts coming down, and whether you really want to kind of sell every item that you want to sell on your platform, which is D2C technically, or you're okay selling it on Flipkart or Naik or Amazon or eventually even using the omni-channel. So the brands that are successful are actually making that transition from not only selling on their own website or their own app, but moving towards platform like yours and also going towards omni-channel. Because if you want to continue to grow with sustainable unit economics, then you need to make sure that you're not spending a ton of money to acquire that marginal consumer who's coming only to an avail discount. And if that means they need to pay 20-30% to the platform like yours or 20% to the retail distribution, so be it. Because at 200 crores, you've created a reasonably decent brand where people are ready to come and buy you not only on your platform, but probably on a platform like yours or through a retail channel. That's something what we're seeing. On the platforms, which are the horizontals, I think the most important thing is, we talked about the tier 2, tier 3, but what we need to make sure is, again, the incremental, the marginal cost of delivery and the marginal cost of acquisition of a consumer, whether that justifies that 500 rupees AOV we talked about in the last presentation. And that's where I think everybody's figuring out their business models, whether it's the large horizontals or the social commerce guys or the content commerce guys. And that's what I think we are focusing on.
That's wonderful, and thank you, Pankaj, for making the case on Flipkart's behalf that omni-channel and platforms is the way to go. My last question was going to be around advice for D2C founders, but I think Arjun and Pankaj have both covered it. If there's anything else you'd like to add, please do. Otherwise, at least for me, the takeaways are there is capital, there needs to be focus on sustainability, there needs to be growth, and there needs to be an omni-channel strategy. So very easy job, I guess.
I would say one more thing. In the presentation before as well, it was talked about customers outside the top 10, 20 cities, right? As e-commerce founders, as people operating businesses, especially when you're building a business that's a consumer brand, you use the product yourself. If you use the product yourself, lots of times our personal bias comes into the product. When I built a business, Dr. Vaidya's, 82% of our customers came from outside the top 10 cities. And so when you think about building your brand, don't think about just building a brand for yourself. Talk to the customer, understand the customer. If it means vernacular communication, if it means going to where the customer is to engage with them, I think there's a really big opportunity in Bharat. Platforms like Flipkart enable you to reach that opportunity. But I think that's something that we cannot forget, and it takes some training of the mind, right? To think outside of your consumer set in the way you consume. But if you are able to think like this, you're really leveraging a large opportunity in our country.
Thanks, Arjun. Pankaj, anything you'd like to add?
No, I think we've covered pretty much all of it.
Wonderful. Thank you for the really fresh take, very insightful perspective. And I hope that with this, we can start off 23 on a very optimistic note. Wishing the best to everyone. And thanks so much, Arjun and Pankaj, for the time and being here.